Hello and welcome to Fin Business. Today we are in conversation with Gaurav Dua from Sharekhan. Sir, welcome on the show.
Hi.
Sir, I would like to take your perspective on the growth of banking sector in India. So, looking at the bad loans of the PSU banks right now, okay, and 12 accounts constitutes 25% of the bad loan of entire 27 PSU banks which is there in the country. What is the reaction that you get from the investors specifically on the PSU stocks? What is the impact that you see on PSU banks? Do you see the bad repercussions in the entire banking sector?
Bad loans have been the larger issue for the banks. Public sector banks have had extremely bad spike in their weaker loans, and as you said, a lot of these loans are the same bulky loans.
Yes.
So these bulky loans have been identified, and that is already been factored in this thing valuations of this bank. That is why you had these banks available at price to book of 0.4, 0.5, assuming, so the market was assuming that half of this thing, net worth can get wiped out.
Right.
So that is already been there in the valuation of the bank.
Right.
But the good part is that the process have started in terms of this cleaning up of the books. Number one. Number two, the government is going to infuse fresh capital into the banks,
yes.
make them stronger. Number third, the government is also looking at a plan for this consolidation of banks, where the smaller, weaker banks will be merged with few stronger and the larger banks. So I think all these three steps will eventually lead to improvement in the health of these banks.
Whenever you look at the market, stock market specifically, all the stock analysis and the equity research analysts always, advise the investor to look at banks. But looking at the bad structure of PSU banks and specifically the value of the banks getting eroded, when the banks are not making profit and there are high chances that the net worth will also erode, do you or will equity analysts still advise investors to put the money in or park their fund into the PSU banks?
That is, Nifty has one third this weightage on this banking sector. So that is huge. You can't ignore that sector if you are this investor. Yes. But you should also look at the fact that out of that this 35% weightage, public sector bank is only around this 2.5%. Right. So when this equity analyst or the advisor are talking about buying banks, they are in fact talking about those private sector banks which are not affected by the NPA issues and have been growing at a healthy pace. Right. Apart from that, you also have a host of NBFC companies which has been doing well. Some of them are like specialized player on this housing loan, mortgages. Others have specialized in this auto loans. They are again have fairly healthy books.
Government of India came with a recapitalization plan for PSU banks. One, how helpful it is, point number one, and point number two, how sustainable it is.
So if you look at the number of 2.1 trillion rupees, I think this package is sizable enough for the bank. It is as much as this 25% of the entire bad loan of the industry. So I think the government has done the right thing, given the right size of this package. The point here is how fast it will come to the banks, right, and how fast the banks will be able to resolve the large chunky bad loans. So I think once you have more clarity on this, these two issues, I think that is when you will be able to have timelines to when these banks will come back in shape and will be able to grow.
So what will drive the banks now going ahead?
Government has been this thing talking in terms of this thing consolidation, because in this public sector also you have some very smaller regional kind of banks which are extremely weak, which are not this thing very well managed. Those have to be merged with the stronger banks.
But will that really help? Because two bad banks basically merges, they will create one bad bank. So will this actually work?
So what this government will be doing is taking a smaller, weaker bank, merging it with a good bank, which is a large bank. So it's a larger bank, it will be able to absorb the pain of the smaller bank. That is number one. Number two, it will have some kind of a short-term impact on the good bank, larger bank. But then the strategy is right, because you will have a lesser this thing, number of players in the industry, which means you will be able to get much more this thing, CASA deposits.
Right.
You will also get this thing better this thing opportunities in terms of growth.
Okay, now I will shift your focus to the private banks. Now, obviously, when we look at the pain of the PSU banks, the bad loan, the recapitalization, those are the main areas. But when you look at private banks, though they are doing relatively good in terms of bad loans compared to PSU banks, the major worry for them is still the FDI. What is the big benefit that the private banks will have when the FDI will go to 100%, or when the cap of the FDI has been increased?
I think government will take this extremely bold step if they allow this 100% FDI in this private banks, because up till now banking sector have been this thing holy sector where
Right.
Government and wanted to have the control under this in domestic owners. But however, if you see around the world, private banks are allowed to raise this thing 100% of the ownership can be spread across, and it can be this thing professionally this thing managed. So I think if it is being done this thing across the world without any issues, I don't see why it cannot be done in India. And if it is allowed in India, and this government has this open mind on this front, I think it will only make it easier for these banks to raise capital, and this capital will be raised at much more attractive rates then.
Do you think over the years going ahead now, whatever the banks have gained, whether it's manpower, whether it's branches, will erode automatically because they are expanding digitally? And the new age banks, now if you look at Paytm or many other banks, they're as big as a mid-level bank. And banks are no more than an IT company. They're providing a service, which is a bank service. Right. So where do you see the value of the banks going ahead now?
I don't think that technology digitization is going to this thing lead to this closure of this branches. Though the kind of this branch expansion that you saw earlier will not be there, but I think you need to have a mix of this thing online and offline,
right,
for this thing longer time to come. And this thing online is not going to eliminate offline this thing structure in India.
True. But now, last year RBI gave permissions to 11 new banks. Those are the payment banks coming into the picture. There are many fintechs coming to the market claiming that they are a digital bank and they don't need any single branch. But they are present everywhere, and this is how the new trend will be. In terms of valuation, in terms of growth, in terms of specific the traditional bank driver, where these banks will stand?
I don't think it will have a major impact on this thing valuations of bank. Though the impact what I see in terms of this thing fintech is that part of the investment piece, or part of this thing CASA float will go to these fintechs. Right. But that will not change the whole this thing structure of this thing banking system so soon. Probably this thing 8-10 years down the line, the story might change. Right. End of the day, you should also understand that these players, Paytm or this thing fintech, they are like still not making money.
Yeah.
They are in a phase where they are this in burning cash. On the other hand, the banks is a very this thing proven this in business model, and they make money, and this thing profits are going off banks.
One more story, and that is the last story, and that is Basel III story. Okay, for any banks now in the world, Basel III norms, for any bank in the world, collaborating and actually implementing and being in the structure of Basel III is very important, because that's a global standard that the Western world came with. How difficult will it be for PSU banks to, apply those Basel III norms?
So, these banks, apart from NPAs, has these two big this thing hurdles ahead. One is, this thing, IND, this thing, IAS.
Yes.
The new accounting standards.
Yes.
Which again are very, very stringent, and which are going to have some impact on their books. Second is this thing Basel III norms. So I think these two will make their journey from being into a bad situation to cleaning up the books and getting stronger all the more harder and tough. So I think that is why I said this whole process has started. But next this thing 2 years are going to be tough for them. So I don't think one should be this thing chasing these stocks so early, just because the process has started.
It was wonderful talking to you. We learned a lot from you. It was a different perspective altogether on the BFSI sector of India. Thank you so much, Gaurav, for sharing those insights with us.
Thank you, Amod.
Thank you, and thanks for watching.